While most people were panicking about oil prices and closing their trading 2-in-2 apps, I was doing the opposite. I invested £250 into the bottom of this recent market crash, and just 14 days later, every single one of those buys is in profit, with 5 of them having already jumped by more than 10%. So today I'm opening up my portfolio to show you exactly which 11 stocks I bought during the Strait of Hormuz dip, but more importantly, I'm going to show you the strategy I used to spot the opportunity while the cannonballs were falling in the harbor. I'll break down the profits, the new passive income I've added, and how you can prepare for the next time the market drops like this. Make sure you stick around until the end because there's something very important to tell you. Let's get started. Now, when I was younger, I did this really risky thing where I would spend my days after work and weekends walking through abandoned and derelict houses. I would look for the worst house I could find in a good block or neighborhood, and I would take videos and pictures. And sometimes I found some really dodgy things, including areas where it looked like people had been sleeping. But that wasn't because I was looking for trouble. You see, I was obsessed with this show called Flip This House, where people would buy rundown houses, renovate them, and either sell or rent them when they were now looking great, because they knew the value was made when you buy, and they knew there is opportunity in adversity. And I actually got an email from the star of the show through a friend of mine. So what does this mean for investing, and why did I use the same methodology for my recent stock buys? Well, first let me show you the stocks that I bought. But guys, as always, remember that I'm not a financial advisor and this is not financial advice. I'm just a guy on YouTube. So remember to always do your own research and take your own risk appetite into account before making any financial decisions. Okay, now these right here are the stocks that I bought with my £250 recently. And you can see I bought additional shares in Realty Income, Simon Property, JP Morgan, Pepsi, EPR, the FTSE All-World ETF, QYLP, London Metric Property, Aviva HSBC and Lloyds Bank. And I mostly invested around £20 in all of them, except the Vanguard FTSE All-World ETF, where I bought £50 in InvestEngine. Now, first of all, I invested in all of these stocks on the 30th of March, and that is probably the most important part of this video because that very day coincides with this arrow right here in the overall worldwide stock market. So what do you notice about that point? Well, the markets are doing well. Then they drop sharply and continue to for weeks on end, and the 30th of March is just about at the bottom before the markets start coming back up. And that is when I invested. And if you look through the price graph for all of these companies, you will see the same thing, of a bottom at around the 30th of March and then upward growth from that point. Now, if you haven't heard, on the 28th of February, the United States launched airstrikes on Iran, and then around the 2nd of March, Iran closed the Strait of Hormuz, which is a huge passage where a large portion of the world's oil needs to travel. This caused oil prices to go up massively, and stock markets around the world crumbled. And of course, that is the big dip that we see here from around that time. And although things have progressed since then, there is still some uncertainty around the area. Now, as an investor, when I saw the strait closed and I saw oil prices go up and I saw the stock market start to plummet down, it took me back to being 19 years old, walking through a nice neighborhood and seeing a rundown property where the paint was peeling off. I saw opportunity. So I have two quotes which are some of my favorite in investing. One is Warren Buffett, who said to be fearful when others are greedy and greedy when others are fearful. Many of you might have heard that one. Then my other favorite is from Nathan Rothschild, who said great fortunes are made when cannonballs fall in the harbor, not when violins play in the ballroom. Both of them knew that there is value in swimming against the stream. So I'm going to take you through these stocks I bought, how I knew to buy them at this exact time, and I'm going to show you exactly how much profit I've made on each of these stocks, with some over 10% in just 2 weeks, as well as my strategy for how to capitalize on events like this in the future. So we've said that in order to build wealth, we need to capitalize on opportunities when they present themselves. Earlier this year, I opened up a SIP, or self-invested personal pension, with InvestEngine, and the reason is that I invest to provide myself with a better life, to know that in each stage of my life, including now and in the future, I don't have to worry and I have a choice. Many people don't know that when you invest through a SIP, you get an additional 25% government bonus on the money you deposit. So if you deposit £100, you get an additional £25 deposited from HMRC that you can add to your personal pension, and you can choose what you want to invest in. but also with InvestEngine, you can also open and invest in ETFs for your normal stocks ISA allowance like you do in Trading 212. But for the viewers of this video, if you choose to click on our link below, open an account with InvestEngine and deposit £100 or more, you will get a bonus of between £20 to £200 deposited into your account. So that's what I did to start my own SIP as well. So if you want to get your bonus, use our link below and deposit £100 or more into your InvestEngine account and you'll receive your cash bonus of £20 to £200. So let me show you the results of those stocks. Now, as I said, I invested in these on the 30th of March, and these right here are the results I had gotten by the 14th of April, just about 2 weeks later. And as of recording, prices have gone up higher as well. As you can see, the growth ranges from 0.1% all the way to a 14% gain on my EPR Properties, and I've got double-digit growth on EPR, Simon Property, JP Morgan, HSBC and Lloyds Bank, with an overall average of 7.5% gain. So I made £18 in a couple of weeks on my £250 investment. I added £10 a year to my annual ongoing passive income through their dividends over here. And the Vanguard FTSE All-World ETF is in my SIP that I have invested with InvestEngine, as I mentioned earlier. So here I've built up around £530 so far this year, with £70 still to come from my HMRC bonus and some good profit. Now here's the important part, and what is important for you to know as an investor. How did I know that that day, the 30th of March, was around exactly when the market would bottom out and that my investments would grow this much from that point on? I'll be completely honest with you. I didn't. I got a bit lucky there. But as they say, luck is what happens when preparation meets opportunity, because overall, this has always been a part of my investment strategy for myself. Now, this might not work for everyone, but there are a couple of things I look for in my portfolio. Firstly, I look for good, solid, long-term stocks for my portfolio. Personally, I don't speculate a lot, I don't look to take too many risks. I look for companies or ETFs which have shown long-term growth and a track record of share price growth and/or dividend growth. Then I invest regularly. Many of these stocks I hold much larger positions in that I've held for many years on end and make up my £15,400 portfolio. Realty Income I have probably invested, I would guess, over 100 individual times incrementally over 3 or 4 years. So I look for solid stocks and I invest by pound cost averaging, which means regular investing to average out my purchase price. And lastly, just myself personally, I tend to invest a bit more when the market has dipped. Going back to what we said earlier, if I see potential in a stock over the long term, like a rundown house on a nice street, and something happens to make the share price drop, I'll typically invest a bit more during those times without overextending myself. That way I can buy a bit more into my portfolio at a discount. And after the market had dropped a bit in March, I chose that day to invest my bit extra. For all I knew, the conflict could have escalated and the market dropped further, and perhaps a little later I would have invested a bit more. None of us can really tell or predict what will happen in the market next, especially with conflicts like this. I certainly didn't predict America's attacks, and I didn't predict that things would improve that week. I just stuck to my plan to invest regularly and add a little more when markets are down in long-term companies and ETFs whose track record I trust will bring more growth and returns in the years and decades to come. A few weeks ago, I posted a video showing my portfolio down to £14,200 and which stocks were in loss. And today, all of my stocks are in profit and I've made some additional gains with my recent investments to bring it back up to £15,400. No one has a crystal ball, so I think it's important, rather than being sporadic or trying to predict things, to create an investment plan based on your risk tolerance and your goals, and to stick to it through thick and thin, and especially thin. Our best friend in investing is consistency and patience. That's how real wealth is built over the long term. So if you see the rundown house on a nice street or a drop in the market, maybe take a look and see if you think there is value for the long term. But guys, that is it for today's video. If you enjoyed it, please leave a like and subscribe if you haven't already. Go claim your bonus on InvestEngine through our link, and I'll see you next time, as always, on Casual Cash. Cheers.